Assalamualaikum. Hi, today I would like to teach you Chapter 7 Accounting for Receivables Part 2. Content for Chapter 7 Accounts for Receivables is accounting method for bad debt. There's two accounting methods for bad debt, a direct write-off method and allowance method. Methods in accounting for uncollectible accounts. First method is allowance method. The second method is direct write-off method. Allowance method consists of two: percentage of receivable balance basis, percentage on sales basis, credit sales and net credit sales. Direct write-off method. Uncollectible account receivable determined by management to written off directly from accounts receivable. The direct write-off method usually does not follow the expense recognition principle because the bad debts expense linked to the sale is not matched and reported in the same period. However, the materiality principle allows the use of direct write-off method when bad debt expenses is small in value in relation to business sales and net income. Journal entry writing off bad debt. Example 1. On 31st December 2018, the balance of accounts receivable for Siti Nurhaliha Entertainment is 188,000. As of a date, a debtor named Ali is unable to pay his debt amounted to 4,800. Journal entry writing off bad debt. Date 31st December. Debit bad debt expenses 4,800. Credit accounts receivable Ali 4,800. Description to record writing off Ali's accounts. This method, estimated uncollectible accounts become bad debts on the basis of percentage of receivables or percentage of sales. Bad debt expense is to be matched with doubtful debt account. Allowance for doubtful debt is shown as a contra account with account receivable in the statement of financial position. First, percentage on the balance of account receivable. Percentage of allowance in percentage multiplied by closing balance account receivable equals to closing balance allowance for doubtful debt. Example 2. Percentage on balance of accounts receivable. Balance brought down allowance for doubtful debts 500. Balance carried down account receivable 110,000. Estimated uncollectible debt 1% of account receivable. 1% multiplied by 110,000 equals to 1,100. Those adjustment is needed to get the amount of bad debt expense. We do a T accounts for allowance for doubtful debt, AFDD. Balance brought down 500. Balance credit down 1,100. And the difference we get 600 as a bad debt expenses. This is a missing figure. After we find a missing figure, we have to do a journal on bad debt. This is the journal of bad debt. On 31st December, debit bad debt expense 600, credit allowance for doubtful debt 600. Our description recording bad debt expense. Example 3. Percentage on balance of accounts receivable. Balance brought down allowance for doubtful debts 1,500. Balance carried down accounts receivable 110,000. Estimated uncollectible debt 1% of account receivable. Okay, this is the formula. Percent of allowance multiplied by balance carried down accounts receivable equals to balance carried down allowance for doubtful debts. 1% multiplied by 110,000 equals to 1,100. Then, the adjustment is needed to get the amount of decrease in allowance for doubtful debt. Accounts allowance for doubtful debt. Credit balance brought down 1,500. Debit balance carried down 1,100. We find a missing figure 400. We debit as decrease in allowance for doubtful debt. The journal is 31st December. Debit allowance for doubtful debts 400. Credit decrease in allowance for doubtful debt 400. Description: record the decreasing in AFDD. The next basis is percentage on net credit sales. Net credit sales is the amount of total credit sales minus sales discount and sales return. The value of bad debt expense is calculated using the above formula. Percentage of allowance multiplied by net credit sales equals to bad debt expense. Percentage on net credit sales, example 4. Balance brought down allowance for doubtful debt 500. Credit sales 23,000. Sales discount 3,000. Estimate that 2% from net credit sales is uncollectible. The formula: percentage allowance multiply net credit sales equals bad debt expense. 2% multiply 20,000. 23,000 minus 3,000 equals bad debt 400. Then we record a journal. 31st December. Debit bad debt expense 400. Credit allowance for doubtful debt 400. Description: recording bad debt expenses. Methods to write off bad debt. Direct write-off method. We journal 31st December. Debit bad debt expense 1,000. Credit account receivable 1,000 to record bad debt. In allowance method have two situations. Allowance for doubtful debt account does not exist before. No balance brought down AFDD. Allowance for doubtful debt account does exist before. Balance brought down AFDD available. If the allowance does not exist, balance brought down allowance for doubtful debt not available. 31st December. Debit bad debt expense. Credit account receivable to record bad debt written off. If the allowance for doubtful debt not available before, bad debt expense adjustment. 31st December. Debit bad debt expense. Credit allowance for doubtful debt to record adjustment for bad debt expense. Please answer this question. Thank you.